Good morning. Welcome to CupO'Forex, and this is your daily video analysis for Monday, the 8th of September. Let's get into it. Today is not a heavy news day. What I want to talk about is a little bit about the non-farm payrolls report that came out on Friday. This number missed the mark greatly. It came in much lower than expected, with only 142,000 jobs being created last month in the world's largest economy, which is the United States. All the data previous and up until now leads most economists to believe that this number is an anomaly. It does not reflect the strength of the labor market in the United States. And most economists believe we should wait till next month and see what the revision is, because most economists feel that that number is closer to 200,000 and not the actual print of 142,000 that we got. So we need to be a little bit patient here. Let's scroll down to our economic calendar, which is at the bottom of our webpage. And here we are. As I said, today is not a big news day. There is nothing of high impact today or tomorrow. Starting on September 11th, however, China starts really releasing the data, as well as New Zealand. Even on September 10th, China comes out with a new loan, with new loans and so on. What this number will show us is whether or not China is actually expanding, and whether or not their recent quantitative easing efforts, trying to inject money to start the economy, is taking some kind of effect. We also get the consumer price index, which we're hoping to come in at 0.4% on a monthly basis, as well as their year-on-year, which we're hoping to come in at 2.2%. This is just slightly below their last release at 2.3%. We also get the producer price index as well coming out. New Zealand is coming out with their unemployment rate as well this week. The United States, we see initial jobless claims coming out later this week on September 11th, as well as retail sales. And the Reuters Michigan Consumer Sentiment Index. We're going to see, how confident the consumers are with the economy. That's also coming out this week as well. As I said, today is not a huge news day, and we don't expect the news to drive the markets. Let's get into some technical analysis. I want to take a look at a couple of forex pairs as well as some of the markets today. Okay, let's get into it. Let's take a look at some currency pairs today. Right off the bat, I like to talk about the euro-dollar again. As we have been falling like a stone right through supports, are going out of style. We've fallen below 1.3250. We fell below 1.32. Then 1.3150, 1.3125. Finally, we're below the key technical support of 1.300. And we are at another minor support level, actually quoting it right now, 1.2950. We're actually trading at 1.29474 right now this morning. Right in this area here, we have a 13-year trend line, which seems to be acting as support. So we're going to be watching this currency pair very closely. A fall below this level and daily close could be very bearish for us at this point. I also want to take a look at the the sterling to dollar. Again, another European currency that is not looking very strong against the US dollar, and we've been falling well below support levels. We had another minor support level of 1.62200, and we're going to be watching this currency pair closely as well. It looks like the US dollar is reaching highs across the board, and that the United States dollar is the dominant currency once again, and we're going to be watching it very closely. Okay, let's continue. I want to take a look at light sweet crude oil index at this time. We did hit a high near 96.00 this week and then fell off, and we've been trading in a really sideways pattern. we do have a bearish candlestick pattern which has formed, so we're going to be looking at the support levels lower. We're currently at a support of 93.50. Below that, we can test 92.80 and a little bit lower. So let's watch light sweet crude a little bit this week. As well, there's a lot of news coming out of the Ukraine, which could affect production. Seems that it's a ceasefire there is not holding as everyone had hoped, as well as a lot of production and supply problems possibly emerging out of Libya as rebels are seizing control of their capital city of Tripoli. So we need to watch the crude oil and sweet crude closely this week. I also want to take a look at U.S. equity indexes, especially in light of the non-farm payrolls release on Friday. As you can see, the markets basically shrugged off the news. Not even the markets believe what they saw. Like I said, it's an anomaly. We are in the Standard & Poor's 500. We are back above the key level of 2,000. At 2,000, we are trading just above a technical support level of 2006.50, and we could possibly push a little bit higher in this market before seeing any reversals of fortune. I do want to mention that U.S. markets are trading kind of stretched in valuation, so let's be mindful of that. And finally, today I'd like to take a look at the Dow Jones Industrial Average. Again, another market that shrugged off the news, which is still trading well above a key technical support at 16,800, and we are trading just below at another level of 17,150. Right now we're at 17,137, and looks like we are consolidating a bit here. We do have a formation of a bearish candlestick in this region, so let's see if we can push a little bit higher in this market today. All right, thanks for listening, and we'll chat again tomorrow. Have a wonderful day trading.